Have you ever felt like the market moves against you the moment you enter a trade? Like there's an invisible force watching your every move, waiting to trap you. You're not alone, and you're not crazy. What you're experiencing is the power of smart money. The big institutions, banks, and hedge funds that control the market from behind the scenes. They don't follow indicators or chase trends, they create them. In Smart Money Concept, Frank Miller reveals the secret playbook of these powerful players, how they think, how they move the market, and most importantly, how you can trade like them. This summary is your complete guide to understanding the smart money mindset, strategies, and techniques, explained in simple language with real-world examples and actionable insights. Whether you're a beginner or an experienced trader stuck in a cycle of losses, this could be the turning point in your journey. Let's dive deep into the world of smart money and finally start trading with the big players, not against them. Part 1. The basics of smart money concept. 1. What is smart money? Smart money refers to big players in the financial markets, like banks, hedge funds, and institutions, who have access to insider information, huge capital, advanced technology, professional strategies. They have the power to move markets and often manipulate price action to trap retail traders. 2. Why retail traders lose. Retail traders, small individual traders, often enter late, exit early, buy high, sell low, trade based on emotion, depend too much on indicators. Smart money uses the behavior of retail traders to their advantage. Gas to buy, creating fake breakouts, triggering stop losses, inducing fear and greed. 3. Market structure. Understanding. Market structure is the foundation of trading like smart money. Markets move in 3 phases: uptrend, higher highs, higher lows; downtrend, lower highs, lower lows; consolidation. Price moves sideways in a range. Smart money operates differently in each phase. 4. Liquidity, smart money's target. Liquidity means areas where lots of orders are placed, such as stop losses or pending trades. Smart money hunts liquidity. They push price into zones with many stop losses. Once retail traders are kicked out, smart money enters in the opposite direction. This is known as stop hunt. 5. Supply and demand zones. Supply zone, area where sellers are strong. Price usually drops from here. Demand zone, area where buyers are strong. Price usually rises from here. Smart money uses these zones to place big trades. Look for sharp moves away from a zone, multiple rejections, price returning to the zone after a long time. 6. Order blocks. And the order block, OB, is the last opposite candle before a big move. In an uptrend, the last bearish candle before a strong bullish move. In a downtrend, the last bullish candle before a big drop. These candles mark areas where smart money placed orders. Price often returns to them before moving again. 7. Break of structure, BOS, and change of character, CHOCH. BOS, break of structure, confirms continuation of trend. CHOCH, change of character, signals possible trend reversal. Example, in a downtrend, if a previous high is broken, CHOCH, possible start of uptrend. These are crucial for spotting smart money entries. Ivar Part 2, how to trade like smart money. 1. Smart money entry blueprint. Here's the step-by-step approach Frank Miller recommends. 1. Identify market structure. Uptrend, downtrend, sideways. 2. Mark liquidity pools, above highs, below lows. 3. Wait for liquidity grab. 4. Look for choch or butt-sot. 5. Find entry at order block. 6. Set stop loss and target profit. This is the core of smart money trading. 2. Liquidity grab plus choch eshta's entry signal. This combo is a powerful sign of the smart money entry. Example, price dips below support, liquidity trap, reverses and breaks previous high, choch. Find bullish order block, Enter buy trade, stop loss, below, OB, take profit, next high, or liquidity pool. 3 entry types. 1. Market execution. Enter after CHACH is confirmed. 2. Limit order. Place buy sell at OB zone 3. Refined entry. Enter at 50% of the OB candle, more precise. Use the one that fits your style and risk appetite. 4. Risk management, the smart money way. Risk only, 1 to 2%. Per trade, minimum 1 to 3 risk to reward ratio. Accept losses as part of the game. Stick to your plan and stay patient. Smart money mindset is about long-term survival and consistency. 5. Trade example. Let's say you see downtrend with lower highs and lows. Price makes equal lows, liquidity pool, sharp drop below support, then sudden reversal. CHACH confirmed, entry at last. Bearish candle, bullish OB, trade setup. Entry, buy at OB, stop. Loss, below, OB, target, next resistance or liquidity zone. This trade aligns with smart money behavior. 6. Confluences. R. Confidence. The more factors align, the stronger the trade. Examples. OB plus liquidity, grab plus CHO-CH. OB inside a demand zone, OB plus FVG plus trendline break. Use confluences to increase your accuracy. 7. Patience pays. Smart money doesn't chase price. They wait for liquidity to build, confirmation, CHACH, BOS, precise entries at OB. As a smart money trader, you should too. 8. Mindset equals 80% of trading. Frank emphasizes mindset. Avoid overtrading. Don't chase profits. Stick to your rules. Stay calm and confident. Discipline plus patience equals success. Part 3. Advanced Smart Money Techniques. Section 1. Inducement, the trap. Inducement is when smart money creates a false signal to lure retail traders in the wrong direction. Example, price forms resistance. Many traders enter sell positions. Price breaks above to trap them, then reverses. Recognizing inducement helps you avoid getting trapped. Section 2. Imbalance, fair value. Gap, FVG. Imbalance happens when price moves so fast that it skips trading levels, leaving a gap. Look for 3 candle patterns with a strong middle candle, gaps between candle wicks. Smart money often returns to fill these gaps. These are great entry zones. Section 3. Reaccumulation and redistribution. These are sideways phases that hide smart money activity. Reaccumulation. Price consolidates before going up again. Redistribution. Price consolidates before dropping. They often trap retail traders, then break out in the real direction. Section 4. Smart money timing, sessions. Frank teaches that smart money prefers specific trading hours. London session, 8 to 11 a.m. UK time. Manipulation and liquidity grabs. New York session, 1 to 4 p.m. UK time. Trend continuation or reversals. Asian session. Slow market used for building positions. Best trades happen during London, New York overlap. Section 5. Multi-time frame analysis. Use multiple time frames to confirm your trades. HTF. Higher time frame, 1H, 4H daily. Direction, structure, OB. LTF. Lower time frame, FVRM 15M. Entries, CHO-CH, liquidity. Example, HTF, bullish trend, OB at 4H. LTF, liquidity grab, plus, CHO action near OB. Result, high probability buy trade. Part 4, building your smart money trading system. 1. Your trading plan. Include strategy, liquidity, plus OB, plus CHO. Timeframes to trade, risk management rules, daily weekly goals, journaling system. Stick to your system, refine as you learn. 2. Journaling your trades. Frank insists on journaling every trade. Why you took it, entry and exit, what worked, what didn't, emotions you felt. Reviewing this helps you improve faster. 3. Backtesting. Practice on past charts. mark structure, OB, liquidity, BOS, Chauch. Test your strategy with historical data. Look for patterns and refine backtesting builds. Confidence. 4. Smart money mindset. Trade like a professional. Patience, excitement, rules, emotions, consistency, big wins. It's not about being right all the time. It's about being consistent and managing risk. Final thoughts from Frank Miller. Smart money. Concept isn't a magic trick. It's a way of seeing the market through the eyes of the big players. Thanks for joining me today. If you found this summary helpful and want to dive deeper into more transformative books, don't forget to hit that subscribe button. Join our community of lifelong learners and stay updated on our latest book summaries and insights. And if you enjoyed this video, give it a thumbs up and share your thoughts in the comments below. What principle from this book resonated with you the most? I'd love to hear from you. Until next time, keep reading and keep growing.